With the current economic climate of high inflation and high interest rates, keeping your wealth in cash only may not be the wisest financial strategy. While cash may provide liquidity and stability, holding or saving cash in the long run can prove to be a liability, as cash tends to depreciate in value and lose its purchasing power due to inflation. Here are 7 assets that are better to invest in than cash. Number 1. Real estate and land. Real estate and land hold clear advantages over cash as assets. While cash is often vulnerable to inflation eroding its value over time, real estate and land tend to appreciate in value over the long term. They offer a real physical resource with potential for rental income or development, providing potentially more than one source of income. Additionally, real estate investments can act as a hedge against inflation, as property values often rise along with the cost of living. Unlike cash, which does not offer much diversification, real estate and land investments add a layer of portfolio diversification, therefore reducing overall risk. These assets also offer tax advantages like depreciation and can be leveraged for financing, enabling investors to increase their returns. Farmland has the advantage of being a scarce commodity, with the total supply of farmland decreasing, offering both appreciation and income over time. Microsoft co-founder Bill Gates is considered to be the largest private owner of farmland in the U.S., with 269,000 acres across dozens of states, according to the Land Report 100. Overall, real estate and land provide a reliable way for capital appreciation, passive income, and wealth preservation, making them superior assets compared to holding cash alone. Number 2. Art and collectibles. Art and collectibles like rare coins have gained recognition as valuable assets that can outperform holding cash alone. They often appreciate in worth over time, especially for rare or highly sought-after pieces. These assets offer a unique mix of aesthetic and investment value, catering to a wide range of collectors and enthusiasts. Their limited supply and cultural significance can create significant demand, driving up their value. While the art market is far less liquid than other investment options, it can offer diversification and potential for long-term gains. Art and collectibles' other advantage is their performance is often not tied to traditional financial markets. Unlike cash, they also offer the potential for emotional and personal enjoyment. One of the popular investing platforms for art is Masterworks that allows purchasing of shares of highly priced works of art. Remember, investing always comes with risks, and it's crucial to do your research before making any investment decisions. Number 3. Luxury goods. Luxury goods have emerged as compelling alternative assets to holding cash due to their unique desirability and investment potential. Unlike cash, which tends to lose value to inflation, luxury goods like high-end watches, fine jewelry, and luxury fashion items like handbags can appreciate in value over time. Limited production runs, brand reputation, and changing consumer preferences often contribute to their increased worth. Luxury brands do not produce items by the masses, so the resale value of the items, even 10 years from now, will most likely increase. These assets also offer diversification benefits. Additionally, luxury goods cater to a global market of collectors and enthusiasts, increasing their demand and potential resale value. One of the most sought-after designer handbag is the Birkin bag. Beyond their investment potential, these items provide the satisfaction of ownership and the status associated with luxury brands. Luxury goods can serve as both a source of financial growth and personal enjoyment, making them an enticing choice over holding just cash. Number 4. Commodities. Gold, silver, platinum. Commodities like gold, silver, and platinum have long been favored as assets superior to cash due to their intrinsic value and historical reliability. Unlike cash, these precious metals tend to hold their worth and even appreciate during times of economic uncertainty. They serve as hedges against currency devaluation and geopolitical instability, making them reliable stores of value. The US dollar's value was at one point tied to gold in what was commonly known as the gold standard until 1971. Another advantage that these commodities have is their use in various industries on products like electronics, semiconductors, and medical devices, ensuring a steady demand. Their limited supply further strengthens their value, as increased demand can lead to significant price increases. Investors turn to these metals not only for wealth preservation, but also for portfolio diversification, as they tend to be more stable compared with other more volatile investments like stocks. Therefore, commodities like gold, silver, and platinum are seen as assets that provide a robust combination of safety, growth potential, and portfolio stability over cash. Number 5. Vintage cars. Vintage cars often appreciate in value over time, making them a potentially lucrative long-term investment. Unlike cash, vintage cars can retain or even increase their worth over time. The value of these cars has historically appreciated over time, with some models increasing in value by as much as 500% over the course of a few decades. If only a limited number of the particular model were ever produced, and only a few are still around today, the more expensive the car will likely be. These cars have a unique appeal and offer the joy of ownership and the potential for personal enjoyment through restoration and driving, whereas cash typically sits passively in a bank account. Vintage cars can also be a tangible and enjoyable asset, allowing owners to showcase their taste and style. They can provide diversification in an investment portfolio, reducing overall risk. While cash serves its purpose in providing liquidity, vintage cars can offer unique advantages as a valuable asset. Number 6. Raw materials. Raw materials possess intrinsic value and utility, as they are necessary for the production of goods. They can provide protection against inflation, as their value often rises with increasing demand. Examples of raw materials include steel, oil and gas, corn, grain, lumber, coal, and minerals. Steel has countless uses in manufacturing and construction, while oil and natural gas control a lot of product prices around the world due to their use in transportation and logistics. Raw materials can also be traded in the commodities markets through commodities futures contracts. Moreover, they can generate income through their use in manufacturing processes or by selling them in a market with fluctuating prices. Raw materials can also serve as a real asset that can be leveraged as a guarantee for loans or as a means of diversifying one's investment portfolio. Holding raw materials can offer both financial stability and potential growth, making them a valuable alternative to keeping cash on hand. Number 7. Stocks and bonds. Stocks and bonds offer the potential for higher returns. While cash typically yields minimal interest, stocks can appreciate in value over time, and bonds provide regular interest payments. This growth potential can be higher than the rate of inflation, helping to preserve and grow wealth. Stocks represent ownership in a company, and as the company grows, so does the value of your investment. Historically, the stock market has averaged an annual rate of return of around 7 to 10%. Bonds are debt securities that pay periodic interest to the bondholder and pay back the principal amount at maturity. Bonds have different maturity dates ranging anywhere from a month to 30 years. Currently, the interest rates on bond yields range from 4 to 5.5%. Bonds can be a safer alternative to stocks and provide a steady income stream. Stocks and bonds provide diversification opportunities, spreading risk across different assets and sectors. Cash, as we have already discussed, is at risk of losing value due to inflation. These investments tend to be easily tradable, providing liquidity when needed. Overall, stocks and bonds offer a combination of growth potential, income generation, and diversification. While cash serves its purpose as a liquid and readily accessible asset, diversifying one's portfolio with these alternative assets can help preserve and grow wealth over time, making them valuable additions to a well-rounded financial strategy. Comment below which other assets are considered better than cash. Watch this video on 7 tips on how to multiply your money. Like the video and subscribe. Thank you for watching.